I'll
True.
repeat that. Winners always keep rotating, and there is no single winner in the last 10 years. So, whether it is large cap, whether it is small cap, whether it is mid cap, or whether it is gold, silver, or debt, there will be some years in which the small caps would have done fantastically well. And if you look at the last 1 and 2 years, the small caps have been the worst performers.
All right. Welcome to what is your daily dose over the last fortnight of these incredible independent financial advisors who have been decoding your money for you. Really, our spine, our backbone as far as wealth creation is concerned. Today on Money on Duty, which is brought to you by SBI Mutual Fund, your partner for life, it's Gaurav Jain from Pratibha Wealth. Just a brief introduction to Gaurav. He's co-founder of Pratibha Wealth, a wealth management firm based in Lucknow. And prior to setting up this firm, he's worked for a decade and a half with global MNCs like Citibank, Procter& Gamble, ICICI Bank. And his experience is not limited to India, but he's also worked internationally. Today, Pratibha Wealth and Gaurav manage approximately 300 crores and plus of wealth across 275 families spread across 17 countries. Wonderful to talk to you, Gaurav. How are you today?
I'm very well, Rishi. Thank you so much for inviting me on the show today.
Gaurav, every day we have a theme with our IFA of the day, and you are our IFA of the day. Today's theme is best way to tackle market volatility. So I'm just going to dive into my questioning. The first one is extreme market events. And we're seeing a fair share of them these days, Gaurav. During extreme market events, does rebalancing create an opportunity advantage, or can it amplify risk if you mistime it?
Sure, Rishi, good that you brought out this question. The fact is that volatility, see, one thing which is going to be certain in the markets is volatility. You cannot insulate as an investor volatility from your life, from your portfolio. So while we have seen volatility very recently, extreme volatility is what you said. We saw that happening during 2020 COVID times. We saw extreme volatility happening in some of the asset classes, especially silver, very recently, just about a month back. And we also saw extreme volatility coming into our lives when the tariffs were introduced.
Yep.
So, while the fact remains that if you are in the market, there is going to be volatility and you cannot insulate it, there will always be some different reasons why this volatility will keep coming in and going out. So, as an investor, I think first thing is what you should not do is try to get defensive about volatility. Try to accept that, boss, volatility आएगी, and you got to embrace volatility, because my experience says that the best investor is not somebody who tries to fight volatility, because you cannot win against volatility. You just have to embrace with it, be friends with volatility, and try to create a portfolio which is like an all-weather portfolio. It's like, when you go out in the market, you have various kinds of seasons, right?
Yeah.
So you got to have a portfolio which is designed in such a way that it's a robust portfolio that helps you tackle volatility and also generate returns at the same time. So your portfolio cannot be just restricted to one asset class, and the favorite asset class that most people want is equity.
Yeah.
Unfortunately, people are only fixated with one thing, which is called returns. But people forget that returns is nothing but a derivative of the risk that one needs to take. So people forget the risk part and only look at the returns. So to kind of tackle that problem, there is something called as an asset allocation, which is literally called the Brahmastra of all investing, because as they say, you should not put all your eggs in one basket. You need to diversify your risk. And that is why you need to have a bit of your money into equity, a bit into property, a bit into gold, silver, which is commodity, and of course, a bit of cushion, which is into debt and bonds and FDs. So extreme volatility, you have to hedge your portfolio so that you are able to create a beautiful experience in the entire journey, because investment is not just a transaction, it is a long journey which you need to be enjoying.
Very well said. I'm going to stick with this thought of uncertain macro conditions and ask you another question, just expanding our discussion a little bit. How do you decide when to increase allocation to defensive assets versus staying invested in growth assets when there are uncertain macro conditions, Gaurav?
See, there will always be uncertain macro conditions and you can't really predict them. So, there is something called as a risk profile, right? Before you invest, you got to have a little framework around with you that how do you really want to deploy your 100 rupees? What is that 100 rupees really is going to create for you? On what, how do you want that 100 rupees to work for you? So you have options. You can put that entire 100 rupees into equity and take the maximum risk and try to generate and hope for the best returns. Or you can also go to one extreme of the cycle where you take zero risk, put your entire 100 rupees into an FD. But how do you define, how do you split that 100 rupees between an extreme conservative and an extreme aggressive thing? That comes from two things. One, what really is it that you want your money to work, or rather, what is your real goal? Two, and this is more important, is which is what exactly is your risk profile? Are you really allergic to market volatility and market movements, just like what happened in COVID, or what just happened to gold and silver very recently after the Trump's tariffs came into
Yeah.
play? So one needs to be very cognizant of the fact that one is your goal and second is your inherent nature of how do you really embrace the world. Because as I said, volatility is going to be always around. How you mitigate that is like, suppose your risk profile gives you, look at risk profile like a diagnosis. When you go to a doctor, he will first give you a medication. Before taking that medication, he will tell you, okay, let's get a blood test done. So this blood test is like your risk profiling before you
Mm.
actually go out and invest your money into it. So suppose your blood test or risk profile says that you are supposed to be a balanced investor. 50% पैसा आप equity में डालो, 50% पैसा आप debt में रखो. In extreme situations, say COVID, when the markets have actually fallen and your portfolio becomes a little, I would say, biased towards debt, or it goes little off balance, then you really need to take that corrective action and try to rebalance that portfolio during extreme situations. And that is where I think rebalancing really helps to ensure that you are coming back to your original desired risk profile.
Gaurav, how often should investors review their allocation? Would you say yearly, quarterly, or only during big market moves?
Honestly, Rishikesh, no perfect answer. Everybody's thought process can be different.
Sure.
Well, what I try to do for me and my clients is typically once a year or maximum twice a year is a fairly good frequency to manage the portfolio, or rather do a portfolio review. I'll tell you the reason. See, strategies don't change every day, while tactics can always keep coming in and out. So when you are planting a portfolio for the long term, you have to give it some time for it to do something around it. If you only look at your NAV or your portfolio performance every single day, like a lot of clients come to us and with their apps that, okay, my portfolio has gone up by 20 lakh and gone down by 5 lakh today. So I tell them that portfolio's NAV, if you look at every day, it will only give you a blood pressure. It will not really create wealth for you. It's like that. You don't necessarily need to look at your portfolio every day. Of course, you should be aware of what's happening, but don't get upset of what's happening in the short term, because your real journey is in the long run. And you have to review your portfolio maybe once or maximum twice a year. That's what my take is.
You know, the layman will always say market volatility, oh my God, a threat. But you're the expert. Is market volatility an opportunity or a threat to investors?
See, 100%. I live with the fact and have experienced it that market volatility is a big opportunity. See, look at it like a business. Suppose you are running a business and you see, your inventory cost coming down. Suppose you are a steel trader and you see the price of steel has suddenly come down for whatever reasons. Tell me, as an individual layman, forget about investing anything in life. when do you make the biggest money? When you buy something cheap and sell it at the top.
True.
So whenever there is a deep correction, which means volatility goes means it's coming down and it's going up and it's again coming down, right? There's a lot of fluctuation happening. So the moment you are in volatile times, you got to look at it that boss, there is a sale happening in one of the showrooms. You want to buy clothes, branded showrooms, and for that particular day, if there is a drop in price, it's a flash sale happening, would you want to buy it or you want to look at skip it for some other day? I think the viewers can look upon it as a thought to process.
That's very well described and a great analogy there. Final question. We talked briefly of silver. Let's talk about gold. With gold prices rising, Gaurav, should investors rethink their asset allocation or just stay disciplined to their original strategy?
See, before gold and silver, let me also tell you one very important aspect, which is the fact that winners always keep rotating.
True.
I'll repeat that. Winners always keep rotating, and there is no single winner in the last 10 years. So, whether it is large cap, whether it is small cap, whether it is mid cap, or whether it is gold, silver, or debt, there will be some years in which the small caps would have done fantastically well. And if you look at the last 1 or 2 years, the small caps have been the worst performers. While we did not even, talk about gold and silver for so many years.
Yes.
Silver has suddenly become the darling of everybody's portfolio because that's where the recency bias starts coming in, where people start thinking that okay, this particular thing has done very very well. So all I'm trying to say is you have to look at your portfolio just like a healthy meal. So it should have a good mix of dal, chawal, roti, sabji, even bit of pickle and dessert. So gold, silver cannot just be 100% appetizer for you, right? It has to find its space in the thali with some 10-15% portfolio allocation. It cannot hold 50, 60, 70% of your portfolio because that will exactly give you a BP, not necessarily give you a peaceful journey in the investment, I would say, total game that you are wanting to play for the long term.
Wonderful. Don't miss these smart money conversations that can help your savings grow smarter. And do remember that mutual fund investments are subject to market risks and you got to read all scheme related documents carefully. Money on Duty with me, Hrishi K, powered by SBI Mutual Fund, a partner for life. We'll keep coming at you till the end of the week and we'll bring you these excellent IFAs who will decode money for you. Gaurav Jain from Pratibha Wealth, thank you very much for your time. I really appreciate it and for your invaluable advice. Cheers.
Thank you, Rishikesh. It was a pleasure coming on the show. Thank you so much. Yeah.
You can find Gaurav on LinkedIn, Gaurav Jain Pratibha Wealth. I'm at HRISHIKAY on X, Instagram, LinkedIn, Threads, and the World Wide Web. See you then. Bye.
One world, your station.